Good morning this Thursday, the 14th of November. I'm Grady Wolf, market analyst with Bell Direct. Wall Street extended its post-rally breather into Wednesday with the major averages ending the day mostly flat. The Dow Jones rose just 0.11%, the S&P 500 added just 0.02%, and the tech-heavy Nasdaq ended the day down 0.26%. The US CPI index for October showed inflation rose to an annual rate of 2.6%, which met economists' expectations and was a slight uptick from the 2.4% reported in September. Core inflation, though, which excludes food and energy, rose 3.3% in the last month, which also met expectations. Over in Europe on Wednesday, the global market pullback extended into the euro region, with the STOXX 600 falling 0.17%, while Germany's DAX lost 0.16%, the French CAC fell 0.14%, and in the UK, the FTSE 100 ended the day up just 0.06%. Across the Asia region overnight, markets in the region mostly fell in line with the global market sell-off, and as investors assessed corporate goods data out of Japan showing year-on-year price growth reached its highest level since July 2023 for the month of October, with a reading of 3.4%. China's CSI index rose 0.62% on Wednesday, while Hong Kong's Seng fell 0.45%. Japan's Nikkei lost 1.66%, and South Korea's Kospi index ended the day down 2.64%. Locally yesterday, the ASX 200 tumbled 0.75%, taking lead from Wall Street's losses this week, and as investors took a breather from the recent post-election rally. 10 of the 11 sectors in the ASX ended Wednesday's session in the red, led by financial stocks falling 1.07%. CBA shares fell almost 0.5% on Wednesday after the leading Aussie bank released a quarterly trading update, including operating income up 3.5%, OPEX up 3%, and unaudited statutory NPAT of $2.5 billion. CBA shares hit a record $150 per share on Tuesday, and a vast number of market participants continue to question whether this valuation is fair or if the bank is overvalued. Building materials producer James Hardie Industries bucked the sell-off on Wednesday to close it higher despite outlining profit dropping 23% in Q2 FY25, with the results out yesterday due to weakness in Europe and China, while its North American division, which is the key driver of James Hardie revenue, is expected to continue growing into FY26. In economic data out yesterday, Australia's wage price index rose at the weakest level since Q4 2022, with a quarter-on-quarter rise of just 0.8% and an annual rise of 3.5%, both of which fell short of economists' expectations and provide a strong sign of inflation easing in Australia, as wages inflation has been a key driver of the stickiness of inflation in Australia in recent months. On the commodities front this morning, oil is trading 0.24% lower at $67.95 a barrel. Gold is down 1.18% at $2,575.86 an ounce, and iron ore is down 0.14% at $102.96 a tonne. The Aussie dollar has weakened again overnight against the greenback to buy 65.28 US cents, 100.83 Japanese yen, 51.2 British pence, and 1 New Zealand dollar and 10 cents. Ahead of Thursday's trading session here in Australia, the SPI futures are anticipating the ASX will open the day up 0.35%, and that's despite global turbulence overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the 12-month price target on Light and Wonder from $165 to $180 per share and maintain a buy rating on the gaming technology provider, following the release of the company's Q3 update, including 12% year-on-year revenue growth and adjusted NPATA of US dollars 122 million, which is growth of 23% year-on-year. The company's outlook target of FY25 EBITDA at $1,400 million or 1.4 billion US dollars was reaffirmed. And Trading Central has identified a bearish signal on South 32 following the formation of a pattern over a period of 21 days, which is roughly the same amount of time the share price may fall from the close of $3.54 to the range of $3.19 to $3.27, according to standard principles of technical analysis. And that's all for this morning. Happy Thursday and happy investing.